Hello viewers and welcome to Crypto Reality Channel once again. It's your boy Pedro, and it's been like a couple of almost 2 weeks since my last broadcast, and I hope you've been having a torrid time in the markets. I hope it's been an amazing experience for you so far. So it's been an interesting period for the markets so far. My last broadcast, or my last couple my last broadcasts in general, basically have been centered around the performance of the DXY, and the very last one was I made mention of the fact that we're expected to see a massive sell-off from the DXY. Given the price action, I'll be dropping the link to that last broadcast in the description section, so you can take a look and help yourself as well. So these these two diagonal lines, trend lines, are from the last broadcast. I'm yet to take them off. And we had I talked about the fact that there was a huge loss of momentum from the two impulse bullish runs from the DXY. So we're likely to see a massive, some sort of a serious sell-off from the DXY, and this has happened. This has played out inch perfectly. We've had take a look at the weekly time frame. You're gonna see you're gonna be looking at first of all, last 2 weeks ended with a bearish engulfing candle, and this was followed in like manner with another massive sell-off from the DXY. So we're currently looking at is a massive reaction of this region that has been that has resulted to serious trend reversals, bullish runs for cryptos and other forex related pairs. So you can see that the market is currently reacting to this level, and it's a massive one. And this is to say that other markets were supposed to take advantage of that massive reaction from the DXY, and you can clearly see a massive reaction, massive sell-off from the forex related pairs. This is the USD card. USD card, we're looking at a potential, what looks to be like a potential head and shoulders pattern here. Maybe we're likely to see like some sort of a bounce from this trend line, which I expect it to be, and we may see some rise. We see a rise basically, rather to the upside, which may likely not be a result to a new higher high. It looks like a potential head and shoulders. This is not yet confirmed, but this may likely be the scenario. The Euro USD, which is a mirror version of the DXY, is playing out perfectly in like manner. You can see a massive you can see the reaction, a complete opposite of what's happening on the DXY, and you can see this relief from the Euro USD as a result of the massive sell-off the DXY, sell-off from the DXY. You can see exactly a mirror version of what's happening on the DXY, and we have other forex related pairs, GBP USD, USD CHF, all reacting in like manner, and you can see the massive sell-off from the USD CHF as well. A massive sell-off from the USD CHF, reacting to this level, to the seller from the DXY. The seller from the DXY has resulted to this massive sell-off. We're currently seeing a little bit of exhaustion from that, from the USD or DXY weakness, but so far so good. There's been a massive reaction from this level. Now, like as earlier envisaged, we're having that massive reaction from this level, from this region of from this region on the DXY chart, that has resulted to huge bullish momentum, bullish runs from other markets. We're currently seeing that happen again here on the DXY, as we're currently experiencing that massive sell-off from this point, and other markets are very well capitalizing on this huge sell-offs and pumping well at the moment. That cannot be said of the Bitcoin and the cryptocurrency market. We're expected to see a like reaction in like manner from the Bitcoin and the cryptocurrency market, but unfortunately that has not been the case. The cryptocurrency market's Bitcoin basically has just been in a very state of choppiness, a very serious state of choppiness. You can clearly see here that we are practically dead. Switching to the Bitcoin, the Binance chart that has a more representative volume, so you can take a look. Volume has dropped massively. We've had this massive drop in volume, and you can see the size of the bars. We've had very little small size of bars. That's showing you a huge loss in momentum. We're currently seeing currently experiencing a very choppy state, a very choppy markets, and you all like I've always said before, choppy markets are the most dangerous market to trade in. They are the most indecisive market. You can see the bars have the candlesticks have reduced, drastically reduced in size. We're just having a very sideways market, green, white, green, red, green, red, green, red, and we're having a massive reduction in volume. So that notwithstanding, we've had this the battle has been the reason for this choppiness from the market is because the market is currently reacting to a very critical level, the market is level, the 30k level or region is a has been very pivotal to the market direction. If you remember very well, the 2021 crash that happened on May 19th was to 30k, and we had a 2 month plus period of consolidation with the bottom coming at around that 30k region. So we were basically just consolidating between 30k and around 42k, which was the case during the period of the 2 months plus consolidation. And if you followed me all throughout that period, I kept on singing, rather, my mistake, about those two territories until we finally had a breakout. So we're currently back to that territory, and there's been, despite all the massive pressure on the market seems to be in a state of choppiness, a huge loss of momentum from both the bulls and the bears alike, as a result of a revisit to that territory, and because the market has not gone further down south, because the DXY is currently losing strength at the moment. It's at a very critical level. So like I've said earlier before, that if this patterns from the DXY stays consistent, we're likely to see a massive relief, if not a complete trend turnaround, trend reversal from the Bitcoin market. This has been the case from the Bitcoin market over the past 5 years, that this pattern has been consistent, and currently we are having a choppy, the market is choppy, so we are currently indecisive as a result of a revisit to this DXY region, and which coincides with a revisit to the 30k territory. So we're currently at that point, and the market is reacting reacting accordingly by this current state of choppiness we are experiencing. So the market will definitely give us a direction. When that would happen exactly, no one can tell. Only Almighty God knows for sure, but that is going to happen. And if this pattern is still going to stay consistent like it has been, this is just the start. We don't know if this is if it's just going to be a major retracement from the DXY for a move further up. But in my like I've said before, I am likely seeing that this is going to stay consistent like it has been before. But if that is to be the case, even if that is to be the case, we are not yet there. This is just the start. This should be like a start of a pattern continuity from this level and or this region. And if this is to happen subsequently, we are likely to see, we should be seeing a direction when the market decides to give us one to the upside. And like I've always said, I don't mind being wrong. This could happen, it could go south, but for now, and I can see all fingers still pointing to 19k and all that. But I am of the opinion, and like I said, it's my personal opinion and not to be seen as financial advice, so long as 30k territory still stays intact on at least a weekly closing basis, which has been the case for the past 2 weeks, ever since we've been in this choppy state. I still favor a bullish move to the upside, even if not for the long term, at least for the interim, at least to this trend line. So long as 30k still holds on the weekly closing basis, I still favor a bullish move. I'm still bullish on this market until the reverse is the case, and that means that 30k is compromised on weekly closing basis. You can see that during this period of this choppiness, which has been on for over 2 weeks now, it's dating back to 12th May or thereabout. We've been over 2 weeks into this. Today marks over about 17 days or thereabout. We've had periods where the market has closed below 29k on a daily basis, but the market is yet to close the week below 30k. So far so good. We've had last week, despite the massive pressure, we had a close slightly above 30k, and the previous week, which was the first week, we had a close above 31k. So you can see that the battle is clearly around this 30k territory, because we are in the region, and the battle is clearly around that region as it stands. So who wins that region definitely would decide as to where the market is going, as was the case last year. The bulls finally won that territory, were able to hold that territory as support, and we had that massive run that led to the formation of a new all-time high. And if that is to be the case, so long as 30k still stays, holds as support, and is yet to be compromised on at least a weekly closing basis, even if there are inter-day closing basis, so long as it can still hold on a weekly closing basis, which is still the case as it stands now, I still favor a bullish move to the upside. So even as it stands now, we're currently looking at 29.2. If we end up closing below, slightly below 30, we can see it's still very much within this territory. I've been marked here. The territory has been marked. Whether the market respects it or not is the market will decide. Well, and but so far so good. This is a territory that has been marked since last year during the period of consolidation, which the market respected so well. The market is currently doing that inch perfectly as things stand. So till I see a full compromise of this region to the downside, and if it has been flipped back into resistance, if it has been flipped into resistance from support, then I can have a conversation of a down for a continuation of this downtrend. But till that happens, I am still bullish so long as this region holds on at least a weekly closing basis. We've had several cases of daily closes below the 30k region within the past 2 weeks, but at the end of the week we've had the week managing to close above 30k. That means the market is yet to make the decision to go further downside. The market still wants to maintain and hold this region as support, and if that is to be the case, so long as this continues to be the case, then this market is still bullish, even if not for a complete trend reversal, at least for a major relief, at least for the interim to the upside, with maybe this trend line as the target. That's one thing I want to discuss. The second thing I want to discuss is the fact that there is a pattern that has been on in the market for quite some time. Yeah, despite the fact that yes, everywhere seems to look all red, and we are looking at as a likely 9th straight week of bearish close for the market, which is maybe like something that has never happened before. But if you look at the bigger time frames, the monthly and the weekly time frames, you'll be looking at the fact that we're basically we've been stuck in a range. I'm going to be drawing that briefly so you can make more sense of what I'm talking about. We're just stuck in a range from the market. Now, it may interest you to know that we've had bullish runs, and after the consolidation last year, 2 months plus consolidation, we had a bullish run to the upside, which led to the formation of a new all-time high in early November of 69k. But if you look at this from a broader perspective, from the bigger time frames like the weekly and the monthly time frames, did we really was there really can we actually say we had an uptrend from a weekly time frame, a bigger time frame perspective, weekly and a monthly time frame perspective? What we basically did the entirety of for what we've been doing for the past 13 months or so in the market is basically just consolidation. That means that what seemed to be like an all-time high was basically just a formation of a second top for a potential double top formation for the market, and this has resulted to a sell-off to the downside, which is the neckline. So we're basically sitting on the neckline of this potential double top formation, and it may interest you to know that even if this is a potential double top formation, which is a downtrend, an uptrend reversal pattern to the downside, this pattern can only be valid with a break below this trend line, this neckline rather. But if the pattern fails, if the trend line fails to get the neckline fails to get invalidated, then we are looking at a pure state of a continuation of a consolidatory market. This has been the case so far. Until this gets invalidated, we're looking at a consolidatory market on the bigger time frame. And it may interest you to know that markets are most of the times in a state of consolidation than they are in the trending market. I've said this several times in the past, that the markets trend roughly 70% of times. So you have only 30% of times when market tend to be trending. Markets consolidate rather 70% of times. So you have about 30% of times when market tend to trend. So and the market makers, who are the institutions or the whales, tend to just operate within these ranges. They are okay to keep the market in those ranges. Looking at a range from a bigger time frame perspective, like the monthly or the weekly, markets tend to follow those ranges and tend to behave, tend to move within those ranges for longer periods of time, for years. From the bigger time frame perspective, markets are stuck in those ranges. Rather, they're stuck in those ranges for very long periods of time. And when you talk about an uptrending market, it's not relative what time frame you're looking at. If you're looking at a daily time frame perspective, which may be like, it's not a long term, but maybe a mid term or a short term perspective, it's fine. But on the long term perspective, you come to realize that most markets are being stuck in a range, and the makers of these markets, the institutions, are very okay with trading this market in those ranges, within those ranges, for long periods of time, extended, prolonged periods of times, which take most times years or months. I'm not going to be going I could give you some examples. I could give you some examples from the forex market, so you can appreciate it, so it doesn't seem like I'm just cooking up this. I'll have a ton of examples. I'm just going to show you a couple of them, so you can make sense of what I'm saying. So here is the euro GBP, euro GBP pair, for instance. Good, great. Here's the weekly time frame or the monthly time frame for the euro GBP. Here's a clear case of a ranging market from the monthly time frame on the euro GBP. If you switch down to the monthly time frame, you realize that maybe the market has been in a downtrend. This is a daily time frame perspective, and you can see a clear case of a downtrend. Here's a trend channel, a downtrend channel, and this has been, even if you go down to the weekly time frame, so it's easier to spot. From the weekly time frame. The market has been in a downtrend from the daily time frame perspective ever since April last year. They're about to have a well-established downtrend, at least from a daily time frame perspective. So the market has been in a downtrend. But if you take a look at the biggest time frame, you see the market is just basically stuck in a range, and you can see that despite the immense pressure on this pair at the support, the market was able to bounce and survive, and this region was not compromised on the bigger time frame perspectives, and you can see it clear. So the market was able to hold very well as support, given the fact that we're bouncing off a multi-year support or a multi-year range bottom, and despite the immense pressure to break further and head further down south, the market is seeing a bounce off that region or that supports, and we're headed to the upside as things stand. This can still go further downside, but at least as it stands now, you can see a clear case of a bounce. We are seeing a significant bounce as things stand now. Whether this is just a relief, just a retracement, or a complete bounce to the upside, only time will tell. But so far so good. The range is still very much intact on bigger time frame perspective, like the weekly and the monthly. So you can see that this is likely going to go up. That's not 100% sure, but as things stand now, this is playing out very well. I'm going to be showing one more so you can take a look and how appreciate this as well. Taking a look at the GBP JPY as well, and we've had this is from the weekly time frame perspective. Here's the monthly time frame perspective. The market has been stuck in a range as well between this point and this point. So even if we had we've had a break above this region, you can see the moment we got to this point, we had this reaction from the market. There was an immediate reaction because this region is a region that the market is likely to the market has been stuck in for years, for an extended period of time. So it took a while, an extended period of struggle for the market was able to break above it, and we're looking at a retest to that level. If this level can hold as support and it can be flipped back into support, likely to see a continuation. But as it stands now, you can see that the market is still trying to there's still this battle for a torso around that region, because it is a region that has been market has reacted, it has acted as resistance for the past couple of years or so. One more, I'll be looking at the DXY that I've always been using. The pattern that has been consistent for the past 5 years now, so is a clear example. I've used this several times in recent presentations, and you can see clearly that this is a monthly time frame, and you can see clearly that despite the fact that the DXY has been bullish ever since last year, dating back to like May last year, the past 12 months or so, we are on daily time frame perspective, we look to be bullish, and we look to be in an uptrend even from a weekly time frame perspective. But basically, on a monthly time frame perspective, we are in a range. It is bullish, no doubt, but it's still a range. When you look at the bigger time frame, the bigger broader perspective or holistic view, we are stuck in a range. So on the maybe smaller time frame perspective, we are bullish, but looking at it from a broader perspective, a broader time frame perspective, we are stuck in a range. And you can see, as a result of this range, we are back to the top of this range, and hence the reaction we currently experience. And the top of this range has usually resulted to massive sell-offs from the DXY, leading to massive bull runs from cryptos and forex related pairs. Hence the reason for the relief, the pumps from the forex related pairs, and the reaction, the choppiness from the cryptocurrency market. This is the reason why the market is yet to head further down south to the 19Ks that everyone is shouting for the market to head down to. And if that region this pattern stays consistent, very consistent, if we see further sell-offs from these markets with time, when Bitcoin decides, when the whales decide to push Bitcoin, in my opinion, we're likely to see further down, or likely to see a pump from the markets. So that is my take from the markets this weekend, this week, and heading into the new week. That is my projection. That's this pattern is still very much intact. That's the summary of everything. The pattern is still very much intact. It is playing out accordingly. So far so good. It's playing out perfectly. And then if this continues to play out like this, eventually I expect Bitcoin to respond in like manner eventually. When that is going to happen exactly, I don't know. I can't tell you for sure, but so far so good. The forex related pairs are reacting, and if this continues to be the case, 30k still intact, 30k territory still intact. With 30k still intact, 30k territory still intact as support, then Bitcoin should follow suit anytime soon. So thank you very much. I hope you had you got value from this, and if you did, please let me know in the comment section. Feel free to like, share, and subscribe this, and then remember that this is for educational purpose and not to be treated as financial advice. Always remember that financial asset trading is a risky affair, so always endeavor to conduct your own research before entering the trade. So do have a